Good evening, everybody. Tonight, along with our normal evaluation, we're going to kind of pinpoint what some of the strongest signals and patterns are that we utilize, because we're going to have a special at the end of this session. And that kind of acts, or the special is going to be the quantitative evaluation of which signals and pattern combinations produce the highest profit trades with the highest profit consistency. So with that, as we analyze the market, we can see the market, the Dow being up 54 today. It closed as a doji right on the T-line, which is kind of telling us our uptrend's in progress still. However, we also have a very simple analysis of tomorrow's trading, which is we definitely want to see the markets open positive. If they open lower, then we have to look for the next support level, which I would suggest to probably be down here a little bit more. However, the strong indication of bullish sentiment in this market was more over in the NASDAQ, where we can see we're in an uptrend. We can see we're in this kind of fry pan bottom, and that's one of the things we're going to kind of illustrate a little bit more in detail, the fry pan bottom and how it works effectively no matter which direction the market is going. But you can see how a couple of things, even on a pattern basis, you can see there's a fry pan bottom, which implies there's probably more upside. Leveling this out a little bit, that we could be heading back up into this area. But the very simple analysis is, as long as the indexes stay up above the T-line, the higher the probability we're in an uptrend. Now, if you look at this more detailed, notice we had kind of an inverted hammer right back to the T-line. A little mild kicker type setup today where it gapped up. So not only did it continue our fry pan bottom, but it did with some good strength today. S&P 500 also has a support level that can be seen. But we definitely want to see this open positive tomorrow. Now, a couple of the ones that we are recommending are based upon pattern breakouts. As we can see on our recommendation on VRS, how we had the kind of bullish confirmation. You can see there was obviously a support level in kind of a cradle pattern. In this case, instead of the cradle being one big day, it was 2 days after the flat trading. Telling us if they break out, that wave 1 and wave 3 are going to be in progress. So the analysis of any pattern is very simple to identify. Like in our evaluation of Kara, you can see the big fry pan bottom. You can see where it broke out. And so all we have right now is one simple factor for holding on to this trend. As long as it stays above the T-line, we stay long. Cliff, another one that kind of had a little fry pan bottom breakout of this level and or this level. Same scenario. All we have to do is stay long as it stays above the T-line. Today we recommended OCUL based upon the J-hook pattern. And this is, again, where you kind of have the benefit of observing what's going on in human nature based upon the signals. Notice the inverted hammer signal. For those folks that are new here, there's what we call the 12 major signals. Out of the 50 or 60 candlestick signals in the candlestick universe, there's 12, and those are just kind of, the T-line is the 8 exponential moving average. And we call it the T-line because it says trigger line. It's got a very simple function. If you see a candlestick buy signal to close above the T-line, you can stay long until you see a candlestick sell signal to close below the T-line. Notice our inverted hammer, one of the 12 major signals, which has an unofficial result, and the unofficial is that I've identified it or used it, let's say, for the last 40 years, that if you see an inverted hammer down toward the oversold area, if it trades positive the next day, you've got a 95% probability or greater that you're going to move higher. Which means if you're moving higher, now you can identify what type of pattern you have. Wave 1, wave 2, J-hook pattern, wave 3. Also, you can see where you're going to have confirmation, which is pretty simple. If they break out, you're in wave 3. If they fail because of the doji and it opens lower tomorrow, what's that tell you about this level? You got a double top. It's very visually easy to recognize. Stochastics are 12, 3, 3, slow stochastics. And again, the stochastics are just kind of an evaluation of where you are in the trend. Vern, you're using a 12-3-3 on a daily chart, which is telling you what the overall daily trend is. When you flip to an intraday chart, it's telling you what's going on right during that time frame. So you don't necessarily have to have or have them in conjunction with each other, because you might be in an uptrend in the daily chart, but intraday you got some backing and filling during the day. That's the difference. That's why we have two studies. Notice that your stochastics aren't anywhere near the overbought area, one, and number two, we're just about ready to break out from a wave 1, wave 2, going into wave 3. So your visual, as far as you might be running out of steam, isn't being, confirmed by the stochastics. The stochastics tell you there's more upside. And the fact that we came off a buy signal and we haven't gotten a sell signal tells us there's a high prospect that if this goes through, this becomes our next price move. Okay. DNR, there's your J-hook pattern. And this is where the combination of knowing strong signals will confirm your pattern. Notice what we had right here, a doji gap up. That's your best friend. You got a doji gap up, best friend, through the resistance levels. What's that tell us? We're in wave 3. How long do you hold on to this? Until you see a sell signal and a close back below the T-line. VIPs, you can still be buying this one. Notice your morning star signal on the support level. Where do you think your next likely target's going to be? Right at the top of the channel, or at least back up here to the 34. And if it goes through there, next target is the 50. If it goes through there, next target is filling the gap up here. So what's this basically telling you down here? That they're basing. Now we have a buy signal. You can still be buying this one on positive trading tomorrow. So that application of analyzing price trends can be used in a $1 stock or a $225 stock like Apple. There's our piercing signal, one of the 12 major signals. Oh, had to take a drink. And see how it's kind of breaking out, again, with a doji gap up. What type of pattern is it setting up? Again, there's your best friend gap up, telling you had a strong price move. Wave 1, wave 2. Now you've got a doji gap up, telling you probably wave 3 is going to be somewhat the same magnitude as wave 1. Now, you can use these biggies for two factors, I guess. As we can see in Amazon, a piercing signal right off the 50. Breaking this little downtrending channel with a doji sandwich. For you new folks, a doji sandwich is merely a long candle, then a doji, a day of indecision. There's a very simple doji rule, that it's going to move in the direction of how they open after a doji, with the implication that if your stochastics are heading up after a buy signal, that if it opens positive, the magnitude of this candle right here is usually going to be the same magnitude as this candle right here. So when you see that, you can pretty well project that this little downtrend, oh, pshaw, that's just a fine howdy. This little downtrend is being breached, probably going into a wave 3. That was Amazon. So the other biggies that get a lot of attention, Tesla. As you can see, the bearish candle right here at the 50, kind of telling you with stochastics up here in the overbought area and them failing at the 50, they're at least probably pulling back to the T-line. However, that gets us set up for our next potential price move. A piercing signal. Let's see, Amazon. A piercing signal is one of the 12 major signals where it opens below any of the trading of the previous day, and it closes more than halfway up this candle. Then if you see bullish confirmation, that's the piercing signal. What was the other one that had a Apple? Apple is a piercing signal or a bullish engulfing signal. Has Tesla traded lower? Let me take a gander here real quick. Yep, it's down to about 270. All right. On the 25th, yes, there's your piercing signal on VLRS. Then notice what happened right after that. Your doji sandwich. What that doji sandwich tell us? That this little downtrending channel was not acting as a resistance level. So the piercing signal has a factor built into it that kind of is kind of the common sense aspects built into candlestick analysis. Japanese rice traders always illustrate where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. So when they gap down below any of the previous day trading and bring it more than halfway up, that means they've hit bottom. Too late to enter Apple? No. As a matter of fact, I'd be buying this one on positive trading with the anticipation there might be another move ready to start. So not only do the candlestick signals tell you when to get into a trade, they'll tell you also when a trade's really not working. For example, notice in NVIDIA, they've been having a hard time getting up through the T-line. Just no energy there. So nothing, you stay out of NVIDIA. Netflix. Bah, humbug. Type symbols. Netflix, you can see what happened here. There's kind of a breakout level. Now we know what to do with Netflix if you haven't gotten into it after the bullish engulfing signal doji sandwich. If it opens positive, we probably have a bullish doji sandwich in progress. Again, telling you this level is not acting as resistance anymore. Oh boy, that's a long question there, Jake. Ask that question, or when I tell Jim to do the double line, that's when you kind of type in your requests, and we'll go through each chart then. What I want to illustrate is that you can take the combinations of signals and patterns. We know the best friend signal is a doji gap up. We've done kind of a quantitative study on about the 14 strongest signals. Everybody always asks, well, which is the strongest signals or patterns? Well, the answer is they're all about the same, all depending on what the market conditions are, except for the kicker signal. However, there are combinations, like the doji gap up best friend. We would rank that as one of your top trades. Now, if we see this in conjunction with identifying a pattern breakout, like your J-hook pattern, we can pretty much calculate this uptrend will probably be the same magnitude as this, and that does two things for us. It knows that it puts us in situations where we know we have a high probability trade, and if we can kind of measure that distance, we first of all can calculate whether it's worthwhile getting into that trade, and two, we can put much more qualified option strategies against it, like a spread. So here's what RNS has done. We can see the J-hook pattern. We can see where it broke out. So what's our calculation on this one? All you do is stay long until you see a sell signal. Now, we're in the overbought area. Candlestick analysis produces very common sense stop loss factors. So when we get up in the overbought area and we're in a good trend, where's the best likely place to put a stop loss versus waiting for it to come all the way back down through the T-line? At today's open, if there's enough selling strength up here in the overbought area that far away from the T-line to come back down through the open of today's trading, that tells you the profit taking has started. So that's kind of the J-hook. There's lots of patterns. One of the big patterns is a fry pan. There's Egan. Look at the fry pan. A rounded bottom, no possible way to trade this until they come out the other side. Notice what's coming out the other side. A move back up through the T-line. That makes target 1, target 2, target 3. How do you place a rather tight stop after buying when prices whipsaw wildly in the you have to wait to see what happens when everything settles down, and then see if you want to get back into that trade based upon, let's say, the 10-minute chart. Target, setting up for kind of a fry pan bottom. ALDX, there's kind of your little fry pan bottom. This is what we're expecting. I think the bigger fry pan bottom was this. Notice where the breakout area was, right about in there. This is the expectation, which is the patterns have expectations, and that allows us to do two things. The ultimate entry at the breakout and the prospect's high profit trade. Now, I think this is what we call the classic pattern. Classic pattern is the combination of a fry pan bottom breakout followed by a J-hook. So the expectation of a fry pan bottom breakout is a very strong price move. The expectation of a J-hook pattern is the preceding very strong price move with a pullback, and then they start back up in the next wave. So if this is wave one, there's still a lot of high probability profits in another move on this one. Again, based upon what we expect coming out of a fry pan bottom. Right here. A breakout. And a breakout of this little slow curve. See how this would be a junkie to try to trade, but we know what the results will be now that it's broken out. Just high probability, big upside. This is what we're expecting, is this type of move coming out of a fry pan bottom breakout area. And we go even into more detail. Notice this right here, this is what we call the dimple. Right here to here is going to be about the same magnitude as from here to here. So we can be buying in here knowing that that was the midway point. Watching 10-minute chart, it shows more time to buy and sell, how to predict the correct one from where to stay long. Again, if you're buying a daily chart, you're not using a 10-minute chart intraday. If you're trading intraday, you use a daily chart to see which direction your overall direction is, and you probably want to be trading in that more in that direction. I'll get to one of those here in a little bit. More attractive. Oh, so again, look at what happened on today's trading on this one. After kind of a rounding bottom, a best friend gap up, we expect a 45 degree to come off of here. I'll get to a 45 degree here in a second. Let me do CAD. There's your little fry pan bottom breakout. So this is what we're looking for. When we can see that fry pan bottom setting up, we're looking for the breakout, because that tells you there's a new investor dynamic. Can you reiterate that again? Jay, I don't know what that was. Too late to buy Rarix? Yes. We're not looking to buy up here. We're looking to buy right here. We're not trying, this is, if we bought right in here, now we're in a hold mode. What are we looking for now with the trend already moving? We're looking to take profits when we see a sell signal, or if we get too far away from the T-line. Remember, maybe I didn't say, when you buy, you can buy in a buy signal and a close above the T-line. You can stay long until you see a sell signal and a close below the T-line. With the caveat that if you start moving too far away from the T-line, more than likely you're going to come back and test it. So if this moved up here tomorrow and I was long, I would flip to my 10-minute chart and start watching to see when the 10-minute chart has a sell signal and a close back below the 10-minute T-line. Why would we do the 10-minute chart? Because the daily chart says we're way out of whack or way up too high. Is it possible to scan for fry pan bottoms? It is. I think there's somebody has the formula in our chat room, but the fry pan bottom is usually witnessed by doing another simple scan, like a big percent price move. If I had a scan where I had this come up, then all right, it looks like it's good. Well, visually I can see we're coming out of a fry pan bottom. So the fry pan bottom is something that you want to visually recognize versus try to go out and find them. you're going to be able to put those on your watch list. So if I was watching this one right here and said, didn't really confirm, I'd have this on my watch list to say, all right, it looks like it's setting up for a fry pan bottom. Okay, let's see. Back to the 45 degree. The 45 degree is a very high profit trade. You can see when they break out, this one was more, this is going to be at a 45 degree because of this breakout. 45 degree is just that steady price move after a big breakout price move. So if you see something like this, where they gapped it up kind of out of a little fry pan bottom, more than likely you're going to see a 45 degree come off of here. Let's see. Our position in Venda is now based upon that. Look at the kind of the fry pan bottom breakout. I would suspect it's going to move up in this type of direction. Can you go over the expected gain? There is no expected gain. The expected gain is that it's probably going to be the expectation is that the price percentage move is going to be fairly substantial. So once the move starts, you've just got a simple trading criteria. You stay long as you don't see a sell signal and a close below the T line. Again, with the caveat that if it starts moving too far away from the T line in the overbought condition, that's where you know it's probably going to come back and eventually test the T line. You get ready to take your profits by using the 10-minute chart. We'll be going through the belt hold signal. The belt hold signal is a very simple analysis of human nature. Uptrend, uptrend, uptrend. They gap it way down out of the trading range, and they bring it back up into the trading range. What did that do? Then you got buyers and sellers, buyers and sellers, buyers and sellers, and then bam, all the sellers get out. The bulls sop up all the sellers. There's no sellers in the way. The next move is usually fairly substantial. Jake, no, it's just visually recognizing when it's starting to move too far away from the T line. Do you wait for the break of top of fry? Yeah, I'd rather wait to see it break out. I'm not trying to second guess because you could have a fry pan bottom. Try to find one. Fry pan bottom that got up to the breakout level and went the opposite direction. Yeah, told you didn't want to be in it. You want to be buying it when the investor enthusiasm is now breaking out the pattern. The scoop pattern is also a viable pattern. Notice kind of the flat handle, and they're starting to bring it back up. So we'd watch this one to see if they bring it up further, and you've got that little scoop, which implies a slingshot effect to the upside. Why don't we sell it as it open, as it is also a breakout? Why don't we sell it as it open, as it also a breakout? Atharva, you're going to have to retype that question. I don't understand what you're asking. All right, so if we know what a fry pan looks like, whoops, let's get rid of all this, all of the horizontal lines. There's our fry pan bottom breakout. Notice what it did when it broke out. Went from 5 to 25. Now it's pulled back. Where did it pull back to? Right smack dab to the T-line. So what's that tell us? Well, it could be in a fry pan bottom J-hook pattern, which we call the classic. Remember, a J-hook pattern needs a strong price move, a pullback, and then it starts the next strong price move. The moving averages, let me get to another chart here where we can see them more clearly. If you're buying coming out of a fry pan bottom, where do you put your stop loss? How do you control the risk? Lots of times I see large breakouts, and even if I use half of the breakout candle, it's a large percentage risk. You have to go on the basis that the probabilities are that if you're coming out of a fry pan bottom, that you're probably in this direction. So your risk reward is pretty much that if it's working, you're going to have a huge percentage move. If it doesn't work, comes back below the T line and the breakout, you close it out. Now, this could be a 200, this could be a 15% loss. It's the risk reward for getting into that pattern. why we don't sell it as it gapped down on the open. Oh, that's called a dumpling top. That's the opposite of your fry pan bottom, which is the open lower today. Told you could be shorting it because what was it doing? It's kind of breaching this whole support area. And the dumpling top is the opposite of the fry pan bottom. It tells you there's going to be a strong force to the downside. So that would kind of imply that if this is wave 1, wave 2, wave 3 could be about the same magnitude as wave 1. I guess I don't know whether I did that to make it a target. INNT is another one that we're watching. There was a fry pan bottom, but it's pulled back. So it might be doing a classic and or what they call a cup and handle. If it starts trading positive from here, you know you've got a cup and handle likely to take you up to the next target area. And what other one did we have? That wasn't it. Again, there's your kind of your fry pan bottom. There's your J hook pattern. So what's the relevancy of the signals? Well, if we know this is a bullish Rami and it's occurring right smack dab on the T line, that's a pretty good indication that the selling has stopped. Get ready for the next price move to the upside based upon positive trading. If this opened positive and I was buying it, what would be the expectation? That it's going in this direction. Where would the stop loss be? At the T line. If it closed back below the T line, it told us it didn't work. Close out the position. So it's that simple process where most money managers to tell you to cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Very simple visual strategies will show you when to get out of a trade that's not working so you can move that money on to something better. So here's the strongest one, the best friend, as we saw in CRC, breaking out, telling us that we're in a J-hook pattern. High probability there's going to be more upside. AVAV, another one where we had the best friend gap up, telling us we got more upside until we see a sell signal and a close back below the T line. So here's that simple process. If we got stopped out here, we could always get back in on positive trading, telling us the uptrend's in progress. Why would we stop out here? Because if you're in the overbought condition and they start gapping up, remember the simple philosophy of the Japanese rice traders saying where do most people buy? They buy exuberantly at the top. That gap up in the overbought condition is your alert to start watching for sell signals or selling. So if I stopped out here and I bought back here, my next stop would be right here at the open, Because if it came back down through there, that tells me again the sellers are in control. Now we can see what's happening. Here's our little J hook. So this one can still be bought on positive trading based upon the J hook pattern. So again, there's your best friend. There's your kicker signal. Kicker signal is, this is what we call a trend kicker signal. Notice the trend had started. It opened here and closed here. The next day they opened it above the previous day's open and went the opposite direction. What's the result of that? That investor sentiment has been kicked in the opposite direction. It's going to be fairly substantial. Now, what are we looking at? Inverted hammer, spinning top, inverted hammer, doji. Doji, gap up. It could be the same magnitude as wave one. Every time we see a signal or pattern setup, we at least know that the probabilities are in our favor. Look at the kicker signal that we're probably in a strong uptrend. And we know what doji sandwiches illustrate. Again, there's our piercing signal, there's our doji sandwich. Broke this down trending channel. The doji sandwich implies there is more upside. NRE. Look at the gap up. What's the very simple setup for a doji sandwich? A bullish candle, a doji. What's the simple rule of a doji? It's going to move in the direction of how they open after a doji. Oh, in regards to RCL. All right, let me go back. So if it opened positive, what's our implication? One, we're opening positive after a doji, telling us we're probably trading positive. Two, it's telling us probably the 50-day moving average isn't going to act as resistance anymore. And three, the magnitude of this candle right here will probably be about the same magnitude as this candle right here. So even if you're a day trader, it gives you good setups based upon human nature. Okay, what was the question? Why don't we sell it as it opens, as it is also a breakout? Why don't we sell it? Repeat that question. Oh, sell it on the gap down? Oh, you could. If you were going short, but because we know what a belt hold signal looks like, if you shorted it because of the gap down, and you saw it doing this, it tells you right away, get out of the position. It's not going down. But not an oversold. That's not a hammer signal. That's a belt hold signal. A belt hold is where they gap it way out of the trading range and bring it back up into the trading range. The Japanese race traders describe it as two sumo wrestlers fighting in the ring. One tries to back out. The other one grabs his belt and pulls him back into the ring, and they're fighting again. What we know, though, is they took out a lot of sellers here, so the next move, if it's trading positive, will have less selling influence in the way. How does this relate to a trader that trades 3 to 5 minute charts, seeing that the pattern, because you're trading on 3 minute charts or 5 minute charts? So remember, if you go back to the very basic definition of candlestick signals, they are the accumulative knowledge of everybody buying and selling during a particular time frame. If I'm buying based upon positive trading tomorrow, based upon the daily signal, I'm probably going to be trading with a bias toward the upside on my 3 to 5 minute chart. that could be. Yep. All right. Okay, let me get through some of the ones that look good for tomorrow. Again, this PTGX did a best friend signal. I would suspect you got more upside off of this one. We looked at Funko already. That looks like it's got the potential of coming back up at least to test this level. Now, there's another simple criteria also, that if this is coming back up, what constitutes the uptrend being in progress, breaking out through this level? So if it gets up here and we see a sell signal, you want to close it out because that tells you the uptrend is over. You want to get out of that position. Same scenario on this one. This one is one of the, weed stocks. There's your big fry pan bottom. This went from in the 30s to over 300. Then it's pulled back. There's your inverted hammer. There's your kind of your bullish flutter kicker. So there's a lot of different strategies. People were in our options room were asking today, how do we trade this? Well, with such volatility, there's different ways to do it. We looked at the maybe buying the 200, selling the 210 for I think it was around 50 cents, with the idea that if it for 50 cents, if it comes up here on wild price move, your 50 cents goes to 10 bucks. Yes, inverted hammer, you want to see it trade bullish the next day. So the one thing that we teach about the inverted hammer as far as the 12 major signals, it's probably the least frequent of the 12 major signals, but it has probably the highest probability. And again, this is unofficial, probably a 95% probability or greater that if you see an inverted hammer signal confirmed, especially down here in the lower levels, it's going to be, I forgot what I was saying. I was reading. That you got a 95% probability or greater that it's going to go higher. That is an inverted hammer gravestone doji. Doesn't matter what you call it, they both act just the same. Oh, I think I did it on the October monthly calls, and I think it was at the time it was about trying to buy the 200 and selling the 210s. For a difference of 50 cents. Now, the risk reward is, if it comes all the way up to 199, your 50 cents went to zero. If it goes to 210, your 50 cents goes to 10 bucks. I would buy on positive trading tomorrow. Now, again, notice the signal that occurred today. Kind of a bullish flutter kicker. A down day, a doji, not quite at the previous day's open, but a positive open after the doji, after an inverted hammer. So what's that tell us? That the profit taking's probably over. Now there might be another run. So again, this is obviously a high speculative mover, so you try to figure out an option strategy. Thank you, Raymond. An option strategy that kind of reduces your risk. What time frame would you buy? Oh, and options, as I say, was probably the October contract, the October monthly. I know some people in the options room have bought Square. And wave 1, wave 2, the gap up on wave 3. If you're buying the stock on that one, what do we expect if it opens positive? That it's going to trade positive. So if I was buying on positive trading tomorrow, I wouldn't want to see it trade back below the T line. Again, it's going to have on these high volatile stocks, you want to pick a spot that tells you the bears are in control, or that you shouldn't be long anymore. This looks like a potential breakout. I don't know why I have that one on here. Oh, maybe I didn't have it over. There it is. That's what's. Okay. There was the breakout. There's your doji. Look where you are right here. So if this opens positive, what can we expect after breaking out? A doji sandwich that would take you up here, telling you they've broken out through this level, you're going to have more upside. And I put this one up because it's got a good-looking chart. This is DRYS, kind of a rounding bottom. You can stay long on this one, but if you recall the history of this one, I think it was back here somewhere. Yeah, this one was the one that went from 4 to 104 in well, I guess they split since then. But it went from 4 to 104 in like 4 trading days because of apparent short squeeze. So now I've really screwed up here. I'm going on. Anyways, just wanted to keep an eye on. Egan, again, a fry pan bottom setup. So the probabilities are greatly in your favor that you've now had a close above the T-line. Stochastic's coming up, and you can see the fry pan bottom. You can be buying this one on positive trading with a very simple upside potential target, and knowing that if it closed back below the T-line, you close it right back out. On the short side, you got things like Dollar Tree. There's your dark cloud, the opposite of a piercing signal. There's a bearish engulfing signal. What's the trajectory telling you? We're rolling this over. You've got a wave 1, wave 2, wave 3, could be all the way down here. So when we have a portfolio put together, usually approximately 10 positions, it's kind of sluggish. You can have different, I don't know how all these lines get on here. You can have different, drastically can change your risk-reward factor, that if you've got maybe 7 long positions, 3 shorts, or 8 longs and 2 shorts, at least you know that with simple scanning techniques, you're always going to find more long positions than you're going to be able to handle. You're always going to be able to find more short positions. So because you have that supply of good trades, you can always pick the best ones. Notice our bearish doji sandwich on IIN. Another wave 1, wave 2, potential wave 3 to the downside. We recommended going short on Maxar. Look at our hanging man, little shooting star, closed below the T-line. Got the potential also of a wave 1, wave 2, going into wave 3. What would be our first potential target? Back down here, which would at least give us a 10% downside. How do you determine which of the trades is better? Jake, that's the whole point of the special that we're putting out, and I'm thinking that in the pretty near future, we're going to be doing another training on the what we call the top-ranked signals and patterns. For short CTL, because of the bearish best friend, the stochastic's still heading down. There's a target of the 200, which would kind of coincide with the gap. Remember, everybody always asks, don't gaps get filled? They do, but it may not be on this trend. It may be on this trend. And Hoya. This is kind of what we call observe the obvious. The obvious is you're in a downtrend. You had a bearish engulfing signal, gap down. You can stay short on this one until you see a buy signal and a close below the T line. Where would you get out of CTL? I wouldn't want to see it after today's inverted hammer signal. I don't think this will probably be a confirmed inverted hammer because look where your stochastics are. They're not down in the oversold area yet. So I would probably put a buy stop just above today's high because logic says if there's enough strength to bring it back up again through that level, the bulls are in control. Okay, let's see. What did I do? Did I answer I guess so. So, anyways, because we can rank or at least identify the best signals or patterns, it gives us a whole better perspective of when we're doing scans and somebody was just saying, well, how do you pick out of so many good trade setups? That if you can see that two of those trade setups are best friend signals, you've already got an edge to know those are probably your high probability trades. Or if you see a fry pan bottom breakout, you know that's a high probability of trade setup. Now the thing that we get coming out of fry pan bottoms is the fact that even if the market turns on you short term, the fry pan bottom, because it's an accumulation of investor sentiment buildup, will probably still move in the right direction or maybe just stop going up for a few days. But if it starts turning, it gives you a day or two more to close out the position without taking a big loss. No. You're still in an uptrend. You probably, at best, have a support level here. It wouldn't be what I would consider your best short trade right now, just because of the accumulation right in here. Okay, so is there any general questions on candlesticks? Oh, I guess we're going to be doing a special. Becky, you got the links for signing up for the special on the top rank signals and patterns? Okay, there you go. And then I guess we got one for the members also, right? Stochastics are 1233, slow stochastics. Oh, I'm sorry. Somebody asked about the moving averages. The red, let me go to the Dow. The red is the 200, the blue is the 50, simple day moving average. The reason those are on the charts is because every major money manager around the world uses those moving averages to make their decisions about the portfolio. The 34 is an effective moving average, just seems to work. But the black line is the T-line, the 8 exponential moving average. Very simple. You can stay long until you see a sell signal and a close below the T-line. Links are not working. Uh-oh. You have to maybe copy and paste them. I don't use the 20-day moving average. The 20-day moving average will work effectively if you've got a long, sustained uptrend. You might have to copy and paste the link. The 34 exponential moving average, I'm sorry. Now, a lot of people say, well, why don't you use the exponential on the 50 and the 200? Wouldn't that be more accurate? We're not using those to make our decisions. We're using those to see what everybody else is making their decisions at those levels. Okay. Yep. So again, that special is deeply discounted because we're going to be, I think, probably in the fairly near future, in the next few weeks, we're going to be doing a full day training on how to use the what we call the top ranked signals and patterns effectively. Yep. All right. I guess, Jim, go ahead and do the double line. And then 3.2 seconds, do the next double line. Okay. Medtronics. That one you get ready to go short. Notice your doji, bearish confirmation close below the T line. I'd be going short on this one on weakness. Yep. Anytime you see a sell signal and a close below the T line, if it starts trading lower the next day, you definitely want to be out of it because that's the very simple trading rule. CDMO, nothing. I wouldn't be long or short. I'd probably need to see more confirmation, like a trading back up above this level. But right now, I wouldn't be long or short that one until you see something confirming. Pro, you stay long as it stays in an uptrend. Is that ECYP? Oh, maybe not. EYET. Oh, there was a very obvious fry pan bottom breakout. Now, this will be a good example to say, all right, look how far away you are from the T line. So this is where you flip to your 10-minute chart. And tomorrow, if the 10-minute chart comes up here and does a sell signal and trades back below the 10-minute T line, that's telling me it's time to take profits. You can see pretty much what it did. It mostly stayed up above the T line today. But the fact that you've moved that far away from the T line tells you profit taking is likely to start fairly soon. Pandora. You can start buying this, but I'd probably wait for it to break this little downtrending channel. If I was short, I definitely, this would be a tough one to be short. But you can be a buyer of this one, just use the T line as your stop. Hydra was one of the ones you should have closed out because it closed back below the T line. So what's the simple rationale? Here's your buy signal. If it closes below the T line and below the halfway point of the candle that told you the bulls were in control, close out the position. Whiting, you stay long. Notice how it's using the 3T line as support, let alone the T line. And AMRN, 45 degree. Just stay long on this one. DNR, just stay long. Got out on Tuesday after it looked like a doji followed by a lower open. And downtrend trading yesterday. Yes, you could have done that. So now pick a spot, because notice the consolidation. It's not very decisive. I'd be a buyer if it came probably back up through today's high. That would tell me they're still buying this uptrend. So you just pick a spot that tells you the consolidation is over. You do have the best friend breakout, and it's more concise over here in CRC, the best friend breakout. So I'd be a buyer on strength on DNR. MKC, kind of a belt hold signal. If you were short, here's a good case of if it opened here and closed down or traded down here, as soon as it came back up through that level, I would have covered the short position. I wouldn't be going long on this until they get it back up above the T-line. That is kind of a belt hold signal. You just need to see more confirmation. Walmart, nothing here. I wouldn't be long or short. Just no direction on Walmart. Kohl's, if you're short, you stay short. But notice you're in the oversold area and you have done an inverted hammer, so it definitely has to open lower to stay short. If it opens positive and starts trading positive, you can see this is the area in the oversold area that the buying has started. Johnson & Johnson, stay short. Use the T-line as your stop. Wayfair, you can be buying this one. Notice your belt hold signal off the 34. Now the gap up through this little downtrend. Stay long until you see a sell signal. First target is to see what happens once it gets back up here. Best Buy, here's a good example where you can see kind of a wedge formation, which pretty much tells you there's no direction. You probably want to go someplace else on this one. eBay, that's not a good-looking chart either. Really no direction. That'd be someplace else. And Nike, continuing its uptrend. Where was the controversial ad? I guess it was right in here. Another little belt hold type signal. If you're long, you can stay long, but I wouldn't want to see it close back below the T-line. Passy, stay short. Use the T-line as your stop. TRXC, stay short. Notice the big bearish engulfing signal and a close below the T-line. Where's your first likely target? Well, probably at least down here. I would kind of use the 34 as my target. And VCell, another one that if it opens lower, it's probably coming back down to the bottom of the trend channel. Dropbox, a little slow bottoming. You can buy this one on strength. You just got to kind of realize that it's not going to do a whole heck of a lot because of the fry pan bottom, probably until they break out through the 50-day moving average. And Tandem, here's a case where you had a J-hook pattern setting up, but it failed. I would be out of this one. I probably wouldn't be long or short. For all you know, this is now a wedge sideways trading. NetEase, just stay long. Use today's open as your stop. It shouldn't come back down through there. Melly, that one you can be buying. I would definitely be a buyer above the 50-day moving average. And this one you can be buying on positive trading. This would be kind of a variation of what we call the McMuffin, which is your Morningstar signal. If it opened positive and did a doji sandwich, you'd have a morning sandwich or essentially your McMuffin. Both of them imply there's going to be more upside. Oh, that one I'm guessing doesn't have a whole lot of volume. If you're long, you can stay long. Put your stop at today's open. It shouldn't come back down through there. Heikin-Ashi is, kind of a vanilla. It's, I helped write some of the formulas for Heikin-Ashi years ago. It's just not a, it's something you can use for much longer trading. You're much better off using the T-line. Trend candles, I don't know what trend candles are. TRVG, stay long, use the 200 as your stop. It shouldn't come back down through there. Win Resorts, stay short. Observe the obvious. Your downtrend, making probably this area your next likely target. Notice your bearish type candle gap through the T-line, making this your first target, making this your second target. Goldman not doing very well, which means I wouldn't be long or short this one because you're right here on a base area. If you're short, you stay short, but it needs to break through this level. We can't get AB, ACB, FF over on this chart for some reason. HIIQ came right up strong today, which means it's still in this fry pan bottom. You can still buy this if it breaks out through, let's say, the $60 area. All right, thank you, Sam. CVRR, you can just don't let it close below the T-line. Expect a bobble. Zenga, wouldn't be long or short, no direction. And ITUS, this one has to open positive and trade positive to stay in it. Oh, cat. AMD, you get ready to buy this. If you're long, you stay long, as long as it stays above the T-line. If you're looking to buy, I'd wait for it to break out through the tops. Micron, I'd probably be someplace else right now. Okay, CVE looks like a kicker. Yeah, a little kind of a kicker. Broke out. I'd still be a buyer of this one. Uh-oh. Be allergic to that cat. Not sure where entry should be. On positive trading. You don't want to see it retrace back to the halfway point or this. What do you expect on a bullish candle breakout? More bullish trade. If it comes back down here, what's it telling you about the bullish strength? It's not there. BWH, another one that if you're thinking of going long, at this point I'd wait for it to break out through the congestion area. Just not a good looking chart right now. Fred, oh, you can get ready to buy this on positive trading. Just make sure the volume's pretty hefty. And Lowe's, get ready to short this one. Notice your best friend, evening star signal, bearish left-right combo. I'd be ready to short this one on weakness. This is where, how far is it going to pull back? It might pull back here, might pull back here, or use what everybody else is watching. Put Fibonacci retracement numbers on. Could be here, here, or here also. Now, nothing. If you're long, you can stay long. I wouldn't be a buyer until it breaks up through here. but that's kind of a junky chart. Can't find it. Could you please give it again? I don't know what that was. All right. Now, Under Armour. You stay long as it stays above the 50 and the T-line. Are these? No, these are all daily charts. Even though it shows 15 minutes, they're just 15-minute delayed, which doesn't mean anything after hours. AYR, good little breakout. Look for a 45 degree off of here. AUPH, stay long out of the fry pan bottom. CNAT, watch to see what it does here at the T-line. That's earnings on Nike. On today. World Wrestling, you just stay long. There's your fry pan bottom. There's your J-hook. Stay long. You're in the overbought area, so have your safety stop at today's open or each day's open. Just very simple, high probability trading practices. Another one where you can think about going long on positive trading. Kind of a J-hook pattern. Right now, on the indexes, we closed as a doji harami on the Dow. Same with the S&P 500, which means we definitely need to see things open positive tomorrow. And the NASDAQ is the most compelling, with kind of a little fry pan bottom with the indication that more than likely they're going to bring it eventually back up here to test the top of the channel. Silica, stay short. Crude oil. It's holding up here. So you're in an uptrend as long as you're above the T-line. But as you can see, it's had 2 or 3 days right in this area. You're still in an uptrend as long as you stay above the T-line. Gold got hit today. You can see how this is rolling over. That's why the gold stocks aren't acting very well. Like Nugget, you could probably start thinking about going short on Nugget. No, not really a morning star. It's just, this is what we call a bobble breakout. Notice how it failed at the 50, pulled back to the T-line, and then broke out through the 50, doing a little bobbling in here, and doing a J-hook pattern. So there's probably more upside. Yelp, stay long as it stays above the T-line. The Russell, still backing off. Didn't see that. Russell's backing off with the NASDAQ trading higher. No, I don't trade the SPX. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart years ago. I just don't have time to trade shorter time trades at this point. Okay, I guess that's about it for tonight. Becky's put in the links for the special. If you want to kind of quantify which are the best trades to get into, so when you see 5, 10, 15, 20 good trade setups, you can at least say which ones of those good trade setups are the best ones. One more. Oops, I don't know where that went. Thank you, Jay. The E-mini is the S&P contract, but the E-minis are 1/5 of that. The workshop, I think, is going to be in about 2 or 3 weeks. What were we doing? Wells Fargo, stay short. A bearish J-hook pattern. Okay, everybody, have a good evening. We will see you bright and early tomorrow morning in the chat rooms. We'll see you then.